for joining us today. Hello and welcome to Business Daily. Coming to you live from Seoul, I'm Lee Ji-yoon. Before we get started, let's first take a quick look at today's highlights. Korea will need to rethink its export strategy in the long term as one of its largest trading partners, China, starts to turn away from its previous model of processing trade. Is Korea's economy advanced or still emerging? We'll sit down with an expert to talk about how global institutions and foreign investors categorize Asia's fourth largest economy and why. But first, we begin with the news of Korea adding nearly 350,000 new jobs in September as more people found work in the manufacturing and hospitality sectors on the back of stronger domestic demand. A report released by Statistics Korea on Wednesday shows about 26.3 million people were employed last month, up 347,000 from the same month last year. This marks the largest on-year increase since May. Meanwhile, the jobless rate stood at 3.2% in September, down from 3.4% in the previous month, but unchanged from a year earlier. Korea's youth unemployment rate edged down to 0.1 percentage point on month to 7.9% in September, the lowest it has been all year. The sibling succession battle at Korea's fifth largest conglomerate Lotte Group has hit a new level. In a shareholders meeting in Tokyo on Wednesday, the elder brother Shin Dong-ju was appointed CEO at the Japan-based Gwangyunsa Corporation, while his younger brother and Lotte Group chairman Dong-bin was dismissed from the board there. Gwangyunsa, an unlisted company, is the biggest shareholder of Lotte Holdings, which is key in controlling the entire group. Following the meeting, the elder Shin successfully secured a part of his father Shin Gyuk-ho's shares in Gwangyunsa, in effect giving him the majority stake. Lotte Group, however, says the results will not undermine Chairman Shin Dong-bin's control over the conglomerate, as the majority of Lotte Holdings shareholders support him. Korean auto giant Hyundai Motor posted record monthly sales in Europe in September, driven by demand for its new Tucson SUV. Data released by the company show it sold slightly over 50,500 cars in Europe last month. Now that's about 5.4% higher than the same month last year. Surpassing the 50,000 mark for the first time, the figure exceeds Hyundai's previous sales record of over 48,000 units in March. The rise in sales was driven mostly by the increasing popularity of the Tucson, which went on sale in Europe in June. Hyundai sold over 9,000 units of the redesigned SUV last month, compared with 3,300 units in August. The Korean automaker also sold over 10,000 units each of its i10 and i30 models. The world's second biggest economy, China, is said to be turning away from processing trade and pushing to expand its domestic supply of intermediary goods. But with these kind of products accounting for the majority of Korea's exports to China, this could spell big trouble for Korea in the months and years to come. Our Kim Junghan has more.
Could Korea's already slowing exports head further downhill? The Bank of Korea says it's likely as China continues to move away from so-called processing trade. Processing trade refers to importing raw auxiliary materials and parts from overseas and re-exporting the finished product after manufacturing it. China used this model to achieve its startling economic growth since the 1970s, taking advantage of its cheap labor resources. However, China has been trying to shift its focus as it's not a value-creating model.
Processing trade made up more than half of China's total trade in 1998, but the figure had fallen to 33% last year. Now that's worrisome as Korea's exports to China are still mainly focused on intermediary products.
As of the end of last year, 73% of Korea's exports to China were intermediary goods, while consumer goods accounted for a mere 7%. Until 2000, when China's trade rose by 1 percentage point, Korea's would rise about half a percentage point, but since 2012, the growth rate has halved.
China has been reducing its dependence on imports of intermediary goods from overseas and instead expanding its domestic supply of intermediary goods, and this has been hurting Korean exporters.
With more than a quarter of Korea's outbound shipments heading to China, experts say preemptive measures need to be taken in sectors where Beijing is increasing domestic supply, such as machine parts and automobiles. They also say Korea could join hands with Chinese companies or directly enter the market in line with the country's changing trade paradigm, as well as focus more on consumer products. Kim Junghan, Business Daily.
The need to invest in research and development is becoming ever more important here in Korea, as a lack of innovation in the manufacturing industry is pulling down Korea's global competitiveness altogether. Our Lee Ju-young tells us more.
Korea's global competitiveness ranking in 2015 remained unchanged at its lowest point in a decade for the second consecutive year. According to a recent report published by the World Economic Forum, it placed 26 out of 140 countries, falling significantly below the initial 11th place from back in 2007. Experts say that Korea's dwindling manufacturing industry played a big part in pulling down its competitiveness, and the country has failed to produce any significant new competitive fields over the past decade.
More industries are positioned in the low value-added range, so I think we should restructure things and use the funds from that to invest in high value-added fields.
Even the country's key industries, which have been spearheading growth, like shipbuilding, automobiles, and electronics, are struggling to compete against countries like China and Germany. Take the auto industry, for example. While Korea has been investing around $5 billion per year, Germany, on the other hand, has been pouring roughly $26 billion annually into R&D since 2009. Not surprisingly, German car brands continue to rank the top 3 in the number of patent applications, while Korean car makers like Hyundai and Kia Motors pale in comparison. Experts also add that being able to commercialize products that have been developed and resolve conflicts among employers and workers are key steps to prop up Korea's ailing manufacturing industry. Lee Ju-young, Business Daily.
Is Korea a developed or emerging economy? While the International Monetary Fund profiles Korea as an advanced economy, many in the global financial market classify it as an emerging market. So what's the difference between the two? And where does Korea really stand?
Korea currently stands at a crossroads between being an emerging market and a developed economy. Emerging economies refer to countries that have contributed to global GDP growth every year since 1970, with rapid industrialization and domestic economic growth, while still lacking characteristics to be on par with advanced economies. When it comes to advanced or developed economies, according to the IMF, they are generally countries that already have a high level of GDP per capita, as well as a very significant degree of industrialization. So where does Korea stand? The IMF classifies Korea as a developed nation, considering the country as a member of the OECD, and the strength and size of its economy places it among the G20 major countries. But many foreign investors think otherwise, seeing Korea as one of the biggest emerging economies that comes with risks, but can provide prime opportunities to make large profits.
And to tell us more about this, Professor Kim Junghan from 성균관 University joins us in the studio today. Welcome to the program.
It's a pleasure to be here.
All right, so how are countries classified as either an advanced nation, advanced economy, or an emerging economy?
Well, it depends on who defines and who classifies. So, as discussed before, IMF defines advanced economy mainly based on a few categories, such as per capita income level and also export products diversities, and also they consider so-called degree of integration into international financial market, and also these are major issues they mainly consider whether they classify into advanced economies or emerging economies. And although the criteria is not exactly consistent with other institutes like World Bank, in case of World Bank, they mainly use so-called per capita income data as the most driving force. And according to them, if roughly per capita income is higher than $12,000, yeah, they usually regard as an advanced economies. And also the story is quite different from the perspective of so-called private sector, private so-called credit rating institutes such as Morgan Stanley Capital Index. In their case, they consider much more items like geopolitical issues, and also they pay much more attention to so-called free accessibility to the financial market, mainly by the foreign investors.
So there are no really a set standard to measure this. All right, then what's the general consensus among foreign investors in the global financial market about Korea?
Also depends on which level we are considering. So when we focus on private sectors, definitely major driving force in private financial market would be so-called, they also include some speculative short-term investors, and they really hate whatever regulation against the free mobility of capital, whether it is speculative or not. So in their case, they pay give quite a heavy weight whether there is whatever types of the regulation against the free mobility, and if there is whatever regulation against the types of the investment. So that's the reason why Morgan Stanley Capital Index and other small index companies give quite a harsh kind of credit rating on South Korea. But according to other international institutes like IMF or rather what kind of governmental level evaluations, still they pay more attention to regular official macroeconomic data. According to those data, still South Korea is mainly classified as an advanced economy.
Okay, then what does Korea put itself into? What does it consider itself
Again,
as?
Depends on who in Korea.
Oh, okay.
So definitely we can say president and our government prefers to be classified ourselves as an advanced economies. And private sectors has some different perspective. There is some pros and cons from classified as advanced economies. Definitely we can expect some benefit from being classified as an advanced economy. We can expect kind of more long-term investment and less volatile kind of strategy taken by the foreign investors. So that would be some positive side. But still, if the Korean economy is classified as an advanced economy, say, as we understand, advanced economy is classified as a so-called low risk, low return area, implying that there might be some reduction of the investment from high speculative kind of investors like kind of hedge funds or other short-term profit-motivated investors might be somewhat affected negatively if we are classified as an advanced economies.
All right, so you could say those are some of the downsides of being classified as an advanced economy.
Yeah, so even within the Korean side, say the private sector will have different perspective on which side their business is more related. Yeah.
All right. Well, recently we've been hearing a lot about how emerging economies have been facing increasing risks. Then if Korea is categorized as an emerging economy, then would it create more instability to Korea's economy as well?
Well, actually, I think we have already experienced that kind of negative impact for what classifies somewhat kind of closely related to emerging economies. So the latest experience would be when U.S. Fed announced is a possible kind of Fed rate hike, then definitely there has been some negative impact on Korean exchange rate, and also some stock market has been somewhat negatively affected. And also in earlier case, when U.S. Fed also was considering so-called reducing their money supply, there was also another negative shock. However, say another quite an important factor we should pay attention would be, although we were not definitely free from whatever negative impact, still we can say we were definitely treated in different way from other emerging countries like Brazil or Indonesia. Means still, in many senses, we are not clearly classified as an advanced economy, but we are not also classically kind of classified as an emerging economy, right?
Okay.
So just on the borderline.
Then what should the Korean government do in order to clearly get the country recognized as an advanced nation?
I think we should pay why we are classified as a possible emerging economy, two factors. That is, still our economic fundamentals cannot be really regarded as a real definite, solid kind of economies that can be classified as an advanced economy, especially when you consider so-called our technology compared to advantage sectors. Still, we are losing lots of our competitiveness against even emerging China. So we have developed our economy mainly as a manufacturing industry, and we are losing that really kind of driving force of Korean economic development. So one of the most important factors would be South Korean government should pay most kind of intensive and organized effort to recover industrial competitiveness. That would be one definite kind of path that we have to take. And second issue would be so-called geopolitical issues. That's very big important issues. Why we are rated as an emerging economy, mainly because of possible instability caused by those geopolitical kind of risks, mainly caused by North Korean factors. So I think the South Korean government should take or change the kind of approach, providing more solid assistance to North Korea to avoid provocative measure as a kind of another way to beg for the possible assistance.
Yeah. All right, so let's hope to see more of that action coming from the Korean government from here on out.
Sure. Yeah.
Thank you so much for coming in today, Professor.
Thank you. Yeah.
And that will do it from me for now. Thanks for watching, and bye-bye for now.